Life Insurance Corporation of India, a great value proposition. LIC enjoys an exceptional competitive edge, stays at the top for the country, both as a life insurer and also an outstanding domestic institutional investor. A giant PSU listed since 2022, leads by far in terms of volume of premium, has a vast network of active agents spread across India, manages funds of over 57 trillion rupees, government holding bordering 100%, display of a dominating cloud. A story of continuous and consistent growth. Revenue moving up from around 6 lakh crore, quite a sizable compounded annual growth rate, moving from around rupees 6 lakh crore in financial year 19 to about rupees 10 lakh crore in FY26. A very impressive 7-year CAGR of about 8%, quite an achievement. Benefits from improved profitability. Besides revenue growth, profits inching up every quarter. NPAT percentage stays on course northbound from around 41,000 crore of NPAT in FY24 at about 4.9% of revenue, growing 18% in FY25, also helped by improved profitability, peaking in FY26 with a growth close to 19%, taking NPAT percentage to an all-time high of 5.9. Valuation multiple quite positive and in a continuous downward slide mode. PE growth ratio in quite an attractive zone, being below 1. Price earning multiples in a downward slide. Price to book value closely mirrors the movement as observed in price earning multiple from June 24 quarter into a deep dip in March 25. Over next 4 quarters has moderated in its incline, ending with an emphatic dip in March 26 quarter. Quite a descending trend in price earning median over different timeline. An incessant fall, particularly on a timeline of 5 years, 3 years and 1 year. And further, the trend continuing 6 months and 1 month, suggesting positivity from an investing perspective. The price story of last 3 years, sideways movement over an year from July 23 to July 26, a 3-year CAGR, a lifetime peak in August 24, followed by a bottom in March 25 and March 26. On the strength of impressive profit growth, hopes raised on scaling the past heights of July 25 in the near term, likely to be followed by potential move towards lifetime peak in the subsequent months. Very positive multiple catalysts for the stock, with the likely IPO of NSE, a massive value unlock expected on the sizable stakeholding of LIC, an inflow of over rupees 30,000 crores, also likely from the expected divestment of LIC stake in IDBI. FPIs expected to gradually evince interest in the stock going by its strong and subnormal valuation. Market cap movement since listing, end-to-end movement from 5.13 lakh crore to 5.33 lakh crores over the period is a very minimal cumulative growth of just about 3.9%. Not quite impressive at the outset. Government stake reduction in LIC is awaited with a great concern. SEBI seeking the stake to be brought down to 90%. This is likely to introduce massive stock flow into the market. The price ceiling effect in the likely offer for sale might prove detrimental to the share price. The timeline of share price impact might extend over multiple years, also impacting the price in the interim. Being a public sector undertaking naturally has its constraints, a cost structure that is at an inherent disadvantage compared to private sector peers, multiple stakeholders, and the delicate social and economic balance to be maintained is always a great challenge. Massive market capitalization of over rupees 5 lakh crores rules out LIC from growing into a multi-bagger opportunity. Market capitalization CAGR has its own growth constraints as observed over last 3 years. Margin superiority rests with the private peers. Its FY26 value of new business VNB margin is at a very strong level, but compared to its private peers SBI Life and HDFC Life, it has a long way to go. The VNB margin gap is a top priority for LIC to work on. The structural weakness of legacy endowment plans in the product mix continues to hold back LIC in its competitive race. With their inherent superiority in competitive technology and operational flexibility, private peers enjoy a clear market edge. The inherent risk of being the largest market player, market movements unduly influence the swing in LIC's profits. The impact of mark-to-market losses from its massive portfolio can be disastrous at times on its overall results. All these can put abnormal pressure on LIC's overall valuation. Mandatory investment requirements in low-yielding government securities is another drag on LIC's overall results. Considering the various positives of market domination, valuation advantage, return on equity, growing profitability, and benefits from expected catalysts, besides the negatives of impact from government stake sale, lower VNB margin, and structural defects, LIC remains an excellent long-term idea for a decent value appreciation and an attractive dividend yield. Hope you found this video to your liking. This is a fortnightly video under Stock Learning Simplified. Similar quality videos await your attention at our info card. We solicit your views and suggestions for improvement. Highly obliged for your valuable time and kind interest. This video is for purposes of information, education and awareness only. This is not meant to be a solicitation or recommendation to buy, sell or hold securities. Wherever applicable, please seek the advice of a competent professional before taking action of any kind.